Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at the gold market as usual on the second report in the weekend. So I would say that our last week report actually was the prophecy for this week, because if you remember, last week we have talked about the bearish grabber on the weekly chart that was shown by the FX retailer chart. So particular my chart here is the FX Pro, and last week it has shown that we have the weekly grabber. Later, when we saw some a bit different action that's not totally corresponds to the idea of the grabber, we have checked the charts of the on the futures of the gold futures, and we have estimated that no grabber has been formed in there. So that is just a problem that we have when we rely on the FX brokers. So the prices that they provide sometimes do not correspond to real price, and we have talked about in our if you remember, somebody of you maybe have read our full course on the FX market was put on the forum, and the one question stands in argue between what is better to trade in the Forex futures or what advantage and disadvantage, and the price question is one of the big advantages on the futures market, because futures is the exchange traded market and provides the definite and absolute prices that you can't get from the FX broker. Because the FX broker provides one prices, another broker will provide different prices, and it leads to some confusion. But this week, guys, actually we finally have got the weekly grabber indeed. And what is more interesting, that we have the mirror situation this week. So FX Pro shows that it's no grabber on the weekly chart, but the futures price tells that it is. So we have the grabber as on the continuous futures, as on the nearest contract in October. So, and in fact, the setup, why I'm talking about the prophecy last week, because in fact the setup and analysis that we have prepared last week is absolutely suitable for this week, at least on the weekly chart and the daily. So on the weekly, as I said, we have the grabber. On the daily, we have the same bearish divergence with the MACD predictor. With the MACD indicator, and currently we could say that we have the bearish context because we have a weekly bearish directional pattern, and it will be valid until market stands below this top. So while market keeps this top untouched, it is a bit risky to take the long position here on the gold, and we should be ready for downward action. At the same time, it's not the reason to abandon, to cancel our long-term view on the possible deeper retracement on the weekly. The appearing of the grabber, and if we would suggest that it will work, will change the shape of the market, and particularly the pattern that could push market right to the 1250. For example, if initially we talked about the ABCD pattern, but right now we could talk about the double bottom, for example, or double repo buy on the weekly chart that could trigger the upward action. But first, existence of the grabber on the weekly suggests the taking out of these lows, guys. And it means that action downward could be really strong. The tricky moment exists on the common week is that we will get the Fed meeting. And it's no questions, no doubts that the rate will be increased. But what is more interesting and more important, what will Jay Powell will tell about the perspective of the United States economy. Taking into consideration the background that we have, it looks very good. And personally, I do not expect any real dovish comments from the Fed chairman. And from that point of view, I would suggest that in general, the overall press conference and the comments from the Fed chairman probably will support the downward trend on the gold. Besides, we have the breakout of the 3% psychological level on the United States Treasury bonds. And it's also a decisive moment, so it's really important. That's why the overall bearish position that we have in the short term on the gold market is not as weak as it could be. And if you still have the bullish view on the market and you are searching for a chance to go long, I would suggest you to get some clear signs that bearish situation is changing. For example, wait for a breakout of this resistance, of this top, or wait when the bearish grabber will work out. For example, if double bottom will be formed, a double repo buy or something of that sort. At least try to get some bullish pattern where you could try to take the long position, because reaction on the bullish pattern, technical reaction, could let you to move your stops to the break even. And if you will be wrong in result, that's technical bounce will just let you to protect your position and avoid big losses. Because if downward action will continue, for example, just for instance, I'm not calling to trade this, but to explain what I'm meaning. Imagine that we could get, for example, this catalyst triple to buy. So we thrust up, ABCD retracement. So you could, if you would like to take the long position, you could think about 1185 area. So if market later will drop lower on the intraday charts, probably we could get some minor bounce here. That will let you to protect your position. But my point of view is that currently I would avoid any attempt to take the long position, because overall context here is not friendly for any long trades. At least weekly grabber is valid. So on the follow time frame chart, we have white triangle is forming. Market stands at the monthly pivot point. Here, guys, our Friday stop with the catalyst triple to sell. As you can see, it worked very good. I would say that drop was 1193 already, although we expect just to the 12 even. So market even exceeded this drop here to the downside. And it's also good for bearish short-term trade. The only surprise, as I said, could come from the Fed. Although, based on, as I said, based on the fundamental picture, I would assess the chances for this diverse surprise as very small. All in all, as a bottom line, this leads us to following conclusion. So, first of all, we are not searching chance to go long yet. That's the first moment. It means that we think only about the taking the short. At the same time, we can't go short right from here, because it's really too far from the top. It's $12 per contract, it's very far standing stop, and it's not attractive for us. We would like to get some better opportunities to go short position. And actually, we do not have any choice, so we would not want to jump in right here. It means that we will be watching for retracement. One of the patterns that could be formed here, and personally I would be watching for that, is a kind of the ABC retracement up somewhere at 1204, 1205 area. As you can see, this will be agreement with this ABC bottom, OP targets, fib resistance, and as a result, it could give us nicely looking catalyst triple to sell. Although the stop also will be not really too close. It's approximately $5-6 per contract, but it will be twice less than from this point. So maybe here at the top, if we will drop the time frame even more, for example, for the 15-minute chart, we will get another pattern that we could stick with and place stop, not above this top, but closer, somewhere above the pattern that we will be forming around this area. So that's our routine work, how we plan and take the positions on the market. But in general, we have this view on the gold market, and that's what we'll be watching for in the next week.